I, on behalf of Tata Elxsi, welcome you all to the Q4 and FY18 earnings call. And we have in Bangalore with us Mr. Qtr4, MD and CEO, and Haribalan, Manager Communication. The agenda goes like this. Mr. Qtr4 will give a brief of the highlights of the Q4 and FY18 earnings, and thereafter you can pose your question, and we would request each of you to restrict to one question. If the time permits, you can come again and have other questions and queries clarified. Now I would hand over to Mr. Qtr4 to take it forward. Thank you.
Thank you. Good afternoon and welcome to this call. In summary, it's been a very good quarter for the company. We achieved a number of milestones in the quarter, not the least being a PBT for the quarter exceeding 100 crores for the first time. And what is particularly satisfying is that all the key segments delivered reasonably good growth in the quarter. As some of you are aware, in the SI business, there is a substantial amount of resale component, and that typically has a peak in Q4, and it ended up having a fairly robust quarter. But besides the resale thing, all the services business also showed very good growth. And even if we look worldwide and if we look across our business segments, everything registered positive growth. So in all, a very satisfying quarter. The year itself was interesting too. There have been challenges in the year with some of our major engagements flattening out, some even declining a bit, but new engagements coming in to compensate and also to give us growth. And that's been the case in both our main EPD segment as well as the IDV segment. And what is really pleasing is that the setbacks were handled reasonably well, and we have ended up the year and the quarter on a very positive note. With this, I would be happy to attempt to answer any questions that anyone may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Attrition from Reliance Securities. Please go ahead.
Yes, thank you to the management for the call, and congratulations on a good set of numbers. So I had a question about your margins. In this quarter, on a sequential basis, your margins have gone down, even though your segment-wise margins have increased in both your segments. So there seems to be a high component of unallocated expenditure. So if you could give some sort of understanding on exactly what is the main components of this expenditure, and then the main reasons as to why the margins were down on a sequential basis.
The margins have not gone down on sequential basis at all. If you see, even at a gross margin level, we are up as compared to the preceding quarter. If you look at the EBITDA, we are up as compared to the preceding quarter. And if you look at the PBT, we are again up in each case by about 1 percentage point. So our margins have not depleted.
Well, so I think, I don't know, maybe is there some mistake because, as per my numbers, 951, about 95 crores is your EBITDA in this particular quarter versus 93.5 last quarter. So I do not include the other income component. So excluding other income, I guess I'm referring to that.
The numbers I have with me are the EBITDA numbers for the total, where the EBITDA is 114.7 in the current quarter as against 100.3 in the preceding quarter.
No, so I think you are including the other income components, sir. Yes. So so if you exclude that part, so that's what I'm asking.
Yeah, I haven't excluded it. The numbers we have include everything.
So because if you see your other income has increased substantially versus the last quarter. So do you have any forex component in that? If you would give that data.
Yeah, even if you see the other income as compared to the preceding quarter, it's gone up by about 12 crores, right? And if you see the EBITDA, it has gone up by 14.7 crores. So even if you take away the other income, the EBITDA has gone up.
No, last quarter I think it was 6.8 crore versus 19.6 crore this quarter. Is that right? I think it was
so it's 12.9, right?
Yeah, so I mean it's about straight. No, so I'm talking about the margin, sir. Not
if you take away 12.9 from 114.7, it is still higher than 100.3.
Okay, I think maybe we could take this offline. Is there any forex component in the other income?
Yes, there would be some restatement of assets and foreign currency.
Oh, so is there profit on that? If you would give that number explicitly, because you've been giving that in the last, in the first and second quarter. So this quarter, it seemed, last quarter and this quarter, I don't seem to have those figures.
I don't have a breakup of the total of the other income for the quarter, but I have it for the year.
Right.
If you look at the annual number, which is 43 odd crores of other income.
Right.
Has currency gain on restatement of assets of 15 crores.
Okay, 15 crores, right.
Yeah, that's for the year. So my guess is for the quarter it will be about 5.
Sure. Okay, fine. And so one last question. From a overall perspective, on an annual basis, what is the likelihood or the possibility do you see of further expansion in the EBITDA margin? So you did very well in FY18. So from FY, without giving any maybe guidance or anything.
We are not looking to expand the EBITDA margins at all. In fact, we exceeded our internal targets in the current year. So we are happy to maintain it in a range like we have had in the previous year.
Okay, fine. So thank you for clarification. Okay. That's it from my side.
Thank you. The next question is from the line of Vimal Kohil from Union Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on a good set of numbers. Sir, I'm referring to your segmental revenues.
Yes.
So the industrial design has recovered marginally this quarter, but however, if I look at it on an FY18 basis, it's flat versus we've had very strong growth in FY16 and 17, upwards of 30%.
Yes.
What would be your outlook on this particular segment going forward?
First, in this segment, the project durations are relatively small. So it's very hard to predict where we'll get to. But at the same time, we know what caused the problem last year, and most of that is now sorted out. And therefore, we should be back on the same trajectory as we were before FY18.
Okay, that's very encouraging, sir. Thank you so much. That's all from my side.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Is the land sales or not? What is our strategy?
Naredi is unable to hear you, sir. Would you like to use a handset, please?
Hello?
Yes.
Now audible?
Yes.
Sir, as the Land Rover and Jaguar sales are not growing, what is our strategy to grow in current year?
See, our dependence on Jaguar Land Rover is to the extent of about 22% of our revenue.
Okay.
And And this really comes from their engineering and design business. We have very little to do with the marketing part of Jaguar Land Rover.
Okay.
So, the engineering budgets are made with a view of about 3 to 4 years, because every new model year takes that kind of time to build. So, irrespective of whatever happens with their business in a particular quarter or a particular time period, engineering budgets will not be altered, because if the market is not picking up your existing cars, the urgency with which you need to introduce new technology is only increased.
Okay. Sir, how many employees we have changed this year? 8 or less like this?
How many what, sir?
How many employees this time is the 31st March?
Yeah, it's the same as 31st December, about 5,500.
And okay. Thank you very much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah, sir, thanks for taking my question. Sir, I first wanted to know what is our constant currency growth rate in FY18 and in Q4 for Q4 FY18 as well as the full year FY18.
Okay. The full year constant currency growth is 15%, and the Q4 constant currency growth is about 5%.
Okay. And Q4 over Q4 of last year or Q4 over Q3?
This is Q4 over Q3. Q4 over Q4 of last year is 12%.
Okay, understood. And sir, within the EPD, if you could give us some color of how each of our segments are progressing and growth rates that they are seeing, the automation, broadcast and medical and your segments.
Yeah, the big one is the automotive segment, and that is maintaining the growth rate that we've had for the last several quarters. The second one is broadcast, which again is fairly stable, despite the fact that the offerings there are going through a churn because of new technologies and so on. The interesting thing in the current quarter has been some new engagements in our medical business. They're very small in terms of revenue. They don't create a significant impact, but these are with customers who have potential to give us fairly large business in the future. So I'm fairly optimistic about the future of the medical business, which is right now a very small part of our revenue.
Sir, our automotive is the fastest growing segment. What would it be as a percentage of our total revenues now?
About 60% is automotive.
Okay, so 60% of EPD or 60% of total?
You can take 60% of the total, because even in design we do a fair bit of work in auto.
Okay. Thanks for taking my questions, sir. Best of luck for the coming quarter.
Thank you.
Thank you. The next question is from the line of Nikit Shah from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. I had two questions. One is on the utilization rate at the end of FY18. And second is, you were working on the autonomous car project for one of your UK client, and you had displayed that during the analyst meet, I think a year back. So any update on that? How is that kind of moving through?
Yeah. First, on the utilization, it was the same as at the end of December, about 82%. On the autonomous vehicle program, what we had shown you was a very basic prototype that we had built on a vehicle here, and this has been enhanced to a full-fledged autonomous driving platform, which we have branded as Autonomai.
Yep.
And this was licensed to a major OEM during FY18, and sub-components of this have also been licensed to some Tier 1 suppliers as well as OEMs. We are in discussion with a number of people who have interest in the entire Autonomai and as a full-fledged solution. which would require some time to materialize and some time to execute, but the progress is fairly encouraging.
So autonomy essentially will be a very large component now, at least in the next 2 to 3 years from an auto revenue perspective, or a significant one?
No, the services revenue would still be far more than the autonomy revenue.
Sure.
While talking of IPs, I may also mention that in our broadcast business, we have a quality of video quality measuring tool, monitoring and measuring tool called Falcon Eye, which had been in the works in the previous years, and the year gone by we demonstrated in a number of trade shows, and we have now got reasonably good traction there. We have breakthroughs in a number of broadcast networks, and in the current year we should see a ramp up in Falcon Eye sales also.
Sure. And how much will be IP-based revenues for us on a percent? I mean, as a percentage of total revenues?
I wouldn't have the exact number. My suspicion is it would be around 5%. 5%.
Perfect. Thank you so much, sir, and best of luck.
Thank you.
Thank you. The next question is from the line of Mayank Babla from Dalal & Broacha. Please go ahead.
Good afternoon, sir. Thank you for taking my question.
Good afternoon.
So if you could just give me the effort mix of your employees for the year-end, FY18.
You mean time and material versus fixed cost?
No, just the on-site offshore effort mix.
Our offshore revenues are about 60%, and on-site revenues are about 40%.
Okay. So, and if you could just, I wanted your opinion or guidance on the various next-gen technologies that you had interacted about in the previous presentation, such as AR, VR, and basically a overview of all the segments that you're present in, and what do we plan ahead for the next 2 years?
Yeah, some of the new capabilities that we built over the last 12, 15 months have been relating to AR, VR, AI, analytics, and so on. And the progress so far has been mixed. Off and on, we seem to have good engagements in AR more than VR. And the success really has been the AI and analytics part of our business, which has grown quite substantially in all the verticals that we address. And we have good, interesting engagements, good problems that we solve for our customers. And we intend on increasing our investment in the AI and analytics part of our business.
And so do we have any particular platform for that, or how does it function? If you could throw some light, the AI platform.
I would be able to tell you what kind of problems we are solving for our customers within the segments that we operate.
Yes.
For example, if you look at a car company, the application of AI is helping the car company get better organized for providing service or using predictive failure rates and so on. And in the broadcast business, we are trying using AI to predict subscriber churns. And therefore, what proactive action can our customers take to prevent the subscriber churn and so on. So those are the kind of problems we are solving.
Okay. And so just last, throughout this year in FY18, what kind of client addition or new client wins did we see in the automotive space?
Totally, we added about 42 new customers during FY18.
Okay.
And I don't have a ready breakup, but my guess is about 20 of those must have been in auto.
Okay. Thank you, sir. That's all from my side, and wish you best of luck for the future.
Thank you.
Thank you. The next question is from the line of Naveen Bothra as an individual investor. Please go ahead.
congratulations, sir.
Thank you.
For the excellent set of operating and financial performance once again.
Thank you.
My question is regarding the earlier also from Motilal Oswal, someone asked regarding the license or IP patents revenues. So you talked about 5% for the whole year or this quarter?
Whole year.
Whole year.
Yeah.
So at the start of the year, I think it was around roughly half to 1%. Is it right?
It was about half of what we have ended up. It's grown about 100% in the year.
100% it has grown.
Yeah.
So can we expect it to contribute around 10% by the next end of the last quarter, next year?
That is our target, certainly. Yes.
Because if we compare the third quarter of last quarter of last year,
yes,
we have 53 crore more revenues.
Yeah.
But 48 crore more profit is also there from software services.
Right.
So I think most of it coming from licensing and patenting income.
I wouldn't say most of it. Some of it certainly, but not most of it. Most of it continues to be services.
Services out of because the employee income is also going up. But despite of that, we are just generally 80 to 90% incremental revenues are generating profit.
Yes, we've had good profitable engagement. You see, all service engagements are not of equal profitability. So it also keeps varying depending on the mix of the kind of work that you've got. So it was a good quarter and are having the right kind of mix and the right kind of IP opportunities also. So all in all, everything contributed.
If I can, earlier you said that 60% of the total revenue is from automotive.
Yes.
So how much is from media, sir?
About 30.
Media. About 30. And rest is 10%.
Yes.
Healthcare, medical and all these things includes 10%.
Yes, please.
Yes. Thank you, sir. Thank you. All the very best.
Thank you so much.
We have already attained $1 billion valuation under your leadership. Now we...
with your support from all of you, hardly my work.
Yes. And we wish all the very best, sir, all to Tata Elxsi.
Thank you very much.
Thank you.
Nice to have well-wishers like yourself.
Thank you. Thank you, sir.
Thank you. The next question is on the line of Govind Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. Sir, is it fair to accept growth rate acceleration in FY19? And what are the drivers for growth in automotive segment?
I'll answer the second part of the question. The drivers for growth are really two. One is the move towards electrics and hybrids, and the other is towards enhanced driver assistance, which the ultimate destination there is autonomous driving. So these are the two areas which are propelling business in the automotive industry. In terms of growth for the next year, we don't give a guidance, but in general terms, I can tell you things are looking quite promising at the moment.
Okay. And, sir, what is the visibility in terms of when you work with automobile companies for revenue in the partnerships with various platforms?
That's a bit hard to even gauge. At any one time, we are in discussion with 4 or 5 companies, and these discussions are not quick and easy. They take a long time, and some of them just fizzle away, some come through. But overall, I would say things are looking up.
Okay. One last question, if I may. How is the product pipeline of a customer looking like compared to, let's say, a year or 2 years ago?
It's certainly far better than 2 years ago, and as compared to last year also, I tend to think it's a bit better, but dramatically better from 2 years.
Okay. Thank you and all the best.
Thanks so much.
Thank you. The next question is from the line of Megha Hariramani from Pi Square Investments. Please go ahead.
Yeah, my question is on the R&D spend. How much are we looking to spend in the next 2 years? And do we have any new product in the pipeline coming up?
I can't answer the amount that we spend on R&D, but depending on the area of work, we do sanction budgets for in-house R&D depending on the effort. So it's very difficult to arrive at a monetary value there, but we do certainly provide resources for doing in-house R&D, and we like the autonomous driving solution that we have, Autonomy. It required a substantial amount of manpower, time, and resources, which we allocated a couple of years back because we thought without that we cannot be a serious player in the automotive market, and that's worked out reasonably well. Similarly, if you look at our IP in the video world, Falcon Eye, we started developing this IP primarily because the existing solutions in the market were severely limited, and they were not open systems and therefore fairly expensive. So we saw a big opportunity, and we put in resources. We have an IP that's ready, being bought by the leading broadcast networks in the world, and the scope for selling more to the same customers itself is fairly large, apart from finding new customers. So depending on the area, we figure out whether it makes sense to invest in a particular R&D effort, or some R&D efforts are just for skill building, and where we do not expect any IP at the end of it and therefore no license revenues. Those also we keep approving depending on the area that we are trying to get into. I hope that answers your question.
Yeah, and the IP-based revenue, which is currently 5%, do we have any internal guidance on where do we see this percentage growing to in the next 2 to 3 years?
We have our internal targets, certainly.
Okay, all right. That's it from my side. Thank you so much.
Thanks.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Amit Jeswani from Stallion Asset Management. Please go ahead.
Hi, sir. I just want to understand about the revenues coming from the IP side, or majority of our revenues just coming from the services side?
Yes.
Right. So, do we have any revenues coming from the IP side at all?
When you say IP, are you meaning information technology or intellectual property?
Intellectual property, sir.
Yes,
do we have?
Yes, I mentioned a little while back that about 5% of our revenue is related to IP licensing.
5%. Right, sir. So what is stopping us from being a 30% growth company? We've done that before, but our base is pretty small. We say that, like, just going through your last phone call, you said that we're not a commodity IT company, we're a design company. There's just so many changes in the world. What is stopping us to be like a 30% growth company?
On a lighter note, the fact that we are a listed company.
Sir,
but really speaking, it's a question of matching the available skills to the available opportunity. And that requires a certain amount of anticipation and a certain amount of pre-planning. If we get it right, those quarters we see a better growth than we see in other quarters. You're right. I think the market opportunity is big enough for us to look at a 30% growth, and internally we do keep questioning all our processes, all our initiatives on why we are not being able to generate a higher growth. So it's got to do with really matching skills with the opportunities, and a lot of it has got to do with anticipating opportunities and planning for it. So sometimes we get it spot on, sometimes we struggle a bit, and that's what's holding us back. We need to improve our planning process a bit.
Right, sir. Thank you so much. I look forward to see you as a 30% growth company, sir.
Thank you. I look forward to it too.
Yeah.
Thank you. The next question is on the line of Het Choksi from Qtr4. Please go ahead.
Yeah, hi sir, this is Het Choksi. Congratulations to the entire team of Tata Elxsi for the wonderful set of numbers and best wishes for the year. So I have two questions from the business development side. The first thing is, I was very impressed from last year's analyst meet about the potential which holds for the airport infrastructure management and the metro railway express coaches. And what is exactly the progress on that front? Because we are seeing a lot of movement on that front in metros, selectively non-metros. And I think, how do you think that this entire smart highway projects are going to help Tata Elxsi going forward? That was one. The second question was on the battery management solutions segment in the automotive segment. How is the company shaping itself going forward with the increasingly demanding electric vehicle charging policy coming up and shaping of deep learning capabilities? How do you see this two things shaping the company going forward?
Certainly the electric vehicle program as a whole, of which battery management is an integral part, I see that as a major driver for our automotive business for the next 2-3 years. And I see today we are looking at only one kind of battery. I see multiple battery strategies coming in, multiple powertrain strategies coming in, and the more the variety, the greater the opportunity for a company like us. So I see that as very strong. On the airports and metro and highway, etc., wherever the customer is sending out an RFP or a tender just for design services, we end up being very strongly placed and very often win. But if it is clubbed with execution, which means running an operation or fabricating something or building something, we have to partner with people who can do that, and then our fortune depends on the fortune of the partner that we go with. So our effort there is to delink design from execution. If you see most of the smart city tenders also talk of, say, a simple thing like a street light. It will say design, erection, maintenance of a street light. Now, obviously, the skills required to do each one of them is quite different. So we end up partnering somebody who can fabricate the street light, who can maintain it, and so on. So then we sort of lose control over our own destiny there. But if it's design of a street lamp, yes, we think we can win against almost anybody.
Okay. And just to follow up on that one particular question, I think everything looks good. How is it that the deep learning capability of the software block which was developed by the company some time back, especially that the high definition maps which we're trying to align with the sensors, how is that segment shaping up in the automotive space? Because I believe that all companies are shaping themselves towards that space,
Yeah, that's part of our autonomous IP.
Okay.
It's a nicely developed component of the autonomous IP, which is now ready for licensing.
Okay, so all in all these segments, you see higher uptake going forward in the next few years because...
yes.
Okay.
Definitely.
All right, sir. Thank you so much for your time and all the very best.
Thank you.
Thank you. The next question is from the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Sir, if you can just confirm what you mentioned about IP, that it has doubled this year, and again you are looking for doubling it to 10% in fiscal 19. Is that correct?
Yes, approximately, yes.
And is this business more profitable for you? I'm sure it would be.
Not yet. It is currently as profitable as services. Because for every successful IT, chances are that there is at least one other IP initiative which has not had that kind of success in the market. So that effort has not yielded results. But it's an art where you have to keep improving and improving your hit rate. Potentially, IPs are very, very important for us, not just for augmenting our margins, but for survival itself. In the future, we will not win business by demonstrating past experience and capability. In future, we will win business demonstrating our IPs, which can be integrated into a customer solution. And that is why the IP programs of the company are very important.
The other thing that I wanted to understand from you, that you mentioned JLR is 20% of your revenue. I believe second biggest for you is Panasonic. So how big are like top 5 customers for you in terms of revenue? And is that a big risk that you think of?
See, I'm not in a position to divulge the names of our customers. Most of them are under NDA. The one customer that we have had permission to share with and has been shared in the past is Jaguar Land Rover, which is our number 1 customer.
So my question is that what would be the total of top 5? I didn't really ask you to specific customer-wise revenue.
The revenue share of the top 5 customers?
Yes.
About 44%.
Okay. And so lastly, you mentioned that you have finally kind of got a new big customer in the medical equipment space.
Yes.
And it seems that you are fairly optimistic about this particular venture. Is that something which is going to become meaningful sometime soon, or it is going to be sometime away?
Our hope is that we'll be able to make it meaningful in the near future. Theoretically, the medical business has very high potential because a very large percentage of the world population is underserved in healthcare. And anything that anyone can do to make healthcare more affordable and more easily accessible has the potential to increase. And, every human being may not be buying a car, but every human being does need healthcare. So that is why we have invested in that business and we are staying there, despite the fact that it hasn't become significant yet. Because we think 5 years, 10 years from now, that may become the mainstay of the company.
So if I can just ask last question, that in terms of overall revenue, are you looking at the growth rate to sustain or improve?
We are trying to improve the growth rate, actually. And we have those directives from our board, and our management team is constantly working at actions that can help us grow faster.
And the business environment is now conducive?
Could you repeat that, please?
For the endeavor to improve your growth rate, the business environment is more conducive now than in the past, or not?
It's not changed very much. It's just that the pace of change in the markets that we address has accelerated over the years, and therefore the opportunity for a company like us is increasing.
Thanks a lot, sir, and all the very best.
Thank you.
Thank you. The next question is from the line of Manish Bhandari from Valdem Capital. Please go ahead.
Hi, good afternoon, sir. So one question I have is regarding if I get it right, you said the number of employees is 5,500 and it's remained flat between 2017 and 2018?
No, between Q3 FY18 and Q4 FY18.
So how much employees you have added in between a 1 year period?
I don't have the exact number, but would be a few hundred.
So I was just trying to come to the attrition number. So I think you are at 14 or 15% attrition number. And
on an annualized basis, we are at 12% attrition.
12%. So is there any measure you have taken to reduce this attrition, because there are not enough companies like yours and potential attrition? And maybe if you could throw some light in which band you have seen this highest attrition, on a 1 to 3 year band or 5 and 7 year band?
Typically in the 3 to 7 year band, that attrition is highest, and there are two drivers for attrition. One is the desire of people to study more. So whether it's a master's in technology or even a business degree, typically they look at those at the end of the first 3 years of working. The other driver is the product companies which have captives or are setting up captives in India. They look at service companies as a hunting ground, and because they don't have any P&L responsibility, they are cost centers for their parent organization, they are able to throw a lot more money than a service company can, even if the work is less interesting. So our effort is to make sure that all our employees realize that the work that they're doing is far more interesting here. The impact that they're creating is far more significant than doing one narrow slice of work in one product company, because in a matter of a few years, they end up working with customers in different parts of the world and often in different businesses. And the overall value to their CV is much higher in a company like ours than in a product company. So we look at all this, and we have a number of programs that identify high performers at every experience band. And those that we identify as high performers, we chart out their career path a bit differently from the rest, because we want to make sure that they stay with the company and their abilities are fully utilized.
So is the attrition level come down in last 3 years, if you have to look at it? Yeah?
If I recall, about at least 4 years ago, it was 18% or something.
So my next question is regarding, would your business require any kind of bolt-on acquisition on any of the areas to expedite the growth, and you have the requisite cash flows also?
We would benefit from acquisitions in certain niche areas. In the case of design, for example, design typically gets serviced by customers, by design agencies and situated in close proximity to the customers. And so in the large markets, if you are not a native, it's very hard to get design work to India. So we would look at design agencies which have access to major markets. So also in the case of the automotive business, a number of big auto OEMs have a cluster of service providers around them. And to get access to some of these, you need to work through the service provider. So we either get into a relationship with the service provider, or if there is an acquisition opportunity with good market access, we will look at it.
So if you could permit me for one more question, or maybe I can join the queue later on.
Go ahead, please.
Okay, thank you. So you mentioned about, I understand when I met you in your AGM, I saw some efforts to do an incubator or an accelerator. And a company like yours was suitably positioned to take and scale that up. So why you have not done that, and what is your thought process on that?
You see that space has changed very dramatically over the last few years. More and more startups do not require the basic facilities that we were providing. They are able to get everything on tap today. Every service is available on tap, including shared office space, shared legal advice, shared business advice, etc. And a lot of the startups today are very much more confident succeeding. Whether success means business success for the startup or an exit for the promoter is a different matter. But therefore, they don't want to be associated with anybody. They want to be completely on their own. So our role is, we saw that diminishing and therefore are not pushing that very hard any longer.
But sir, if I look back, Silicon Valley, most of the successful companies or enterprise companies have a startup, and many of them have now started circling around in India. So maybe more broader thoughtfulness on your offering or differentiated on the offerings would have, or maybe some changes in the offering would have made that far more, and maybe that would provided some room for thought for you too.
Yeah, possibly.
Okay, thank you. Thanks a lot.
Thank you. Any participants would like to ask a question at this time, then may please press star and 1. The next question is from the line of Pankaj Bajaj as an individual investor. Please go ahead.
Yeah, hi. Thank you very much for the opportunity and congratulations for the number.
Thank you.
My question is regarding telecom space. What is the share, revenue share coming from the telecom space?
I won't have the breakup of the telecom space at all.
But not significant, right?
We have some engagements, and I know it has grown over the preceding year, but it would be a very small component of our revenue.
Okay. So second question is on the number of clients. Any change in number of clients from QOQ?
No. In fact, we are looking to reduce the number of clients, and we want to deepen the relationship with existing clients. So, but that's a work in progress and not much output yet.
Okay. The last one is revenue share of top 10 clients.
Could you repeat that, please?
Revenue share from top 10 clients.
It is now 57% or so.
Okay. Okay. Thank you. Thank you very much.
Thank you. The next question from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Sir, thank you once again. Can you share what is the internal target of your growth for this year, sir?
Unfortunately, I can't.
Thank you. Thank you.
Okay. Thank you. We have the next question from the line of Vijay Kumar as an individual investor. Please go ahead.
Hi, good afternoon, and thank you for this opportunity. First of all, congratulations on being the biggest IT wealth creator of the last decade.
Thank you. Thanks to all of you.
It's been a great journey. I've been invested in this company for the last 10 years. So, in spite of first few years of boring put, but in last 3-4 years have been amazing, and all the very best for the future. I have a couple of questions. One is how is this work with Unity taking off? Because VR, AR, and 2D, 3D, all that space is going to be one of a promising sector. So how is that shaping?
It's slower than we expected it to grow, but it's not as if it's stagnant or anything. But it's certainly slower than we expected the uptake to be. But nonetheless, these are skills which will be useful in many areas in the future. So we are staying invested, and our partnership with Unity continues to be strong. And we think in the next 2-3 quarters we should see a significant change.
Okay. And how about National Instruments? That's another partnership that you have announced.
Yes.
Yeah.
That is for automotive test and simulation. And we have engagements which have come out of this partnership, and we are recognized as probably India's leading hardware and loop simulation service provider. for auto companies, and that's in part thanks to alliances like with NI.
One more question on other emerging technology like blockchain. Is Tata Elxsi looking at some acquisition in space or build your own IP?
You see, one of the IPs that we have built and which should be getting deployed pretty soon is a V2X simulator. It's a vehicle to infrastructure simulator. Now, we think blockchain will get integrated with anything to do with V2X. And it will be our endeavor to build blockchain capability into our simulator. We are not looking at blockchain in areas outside of our current business. And in the current business, the vehicle to infra is where blockchain should have a play.
Thank you, sir. And a final question is, what's the cash in hand?
About 390 crores.
Thank you, sir. Thank you. All the very best.
Thank you.
Thank you. The next question is from the line of Vinesh Wala from Dolat Capital. Please go ahead.
Yeah, sir. Thank you for the opportunity. I'm not wrong. Our employee base right now is 5,500.
Yes.
Yeah, and what are the plans of addition in the employee base going ahead?
There are two levels of recruitment that we do. One is fresh graduates from leading colleges, which is planned a year in advance, pre-committed, etc. So that is already on, and now we'll be starting to work on the hires for the calendar year 2019. The other is the laterals that we bring in, which depend on our engagements and our visibility of future engagements. And that's an ongoing thing depending on new areas that we're getting into or new opportunities. We hire those people as we need them.
Okay, sir. Thank you. That's it from my side.
Welcome.
Thank you. The next question is from the line of Anita Gandhi from Arihant Capital. Please go ahead.
Sir, congratulations to the entire team for the good set of numbers.
Thank you. Convey it to the entire team.
Yes. So I want to know your in each of your businesses, one name of your next competitor and a little bit color on the market share in each area of business.
I don't have this information readily available, but we have in the past talked about different companies competing with us in different spaces, and in the automotive space, the company that we encounter most often is KTIT.
Okay.
And it's different in different geographies, different verticals, and our market share, if you see globally, it's not significant. So therefore, there's a lot of headroom for growth. So we don't worry too much about winning business from somebody else. We think there's enough opportunity for all the Indian companies to grow.
Okay. So is Cyient your competitor in any part of your business?
There are. But what we bring to the customer is a unique set of capabilities. And the combination of design and technology is something that we've built up over the last 10, 12 years. And this combination delivers outcomes for our customers which are far superior to what just a design company can do or a technology company can do. So this combination is very potent and therefore is a key differentiator for Tata Elxsi.
Okay.
Thank you. The next question is from the line of Kumar Saurabh as an individual investor. Please go ahead.
Hello, can you hear me?
Yes, I can.
Congratulations on the good results, sir. I have one question.
Yes, thank you.
The auto industry is changing a lot in terms of there is a lot of thrust on electric vehicles. So So how do you see this as an opportunity for the company? Can you give some more light on this?
Yeah, you see, I mentioned in some other context, the pace of technological change is what determines the opportunity for a company like us. If a technology is mature and static, there's not much for us to do. And the car industry, automotive industry, which had been largely static for almost 40, 50 years, has suddenly come to life with first driven by the need for lower emissions, then for the need for better driver comfort and driver assistance, and towards all that was moving towards autonomous driving. Then came the electrics and hybrids and the power management and the battery management opportunity. So all these have enabled a car or automotive service provider like us to keep growing in these areas. So it's all very good right now.
Okay, thank you.
Thank you. The next question is from the line of Dhruv Saral from Credit Capital. Please go ahead.
Sir, can you hear me?
Yes.
Yeah. Sir, I just wanted to know that we've been reading in the past that a lot of companies have opened a GICs in India itself. So would they typically be partners with you, or would they be a standalone entity that would actually be a competition in that sense?
Yeah, I was mentioning that a lot of international product companies have open centers in India. And whenever they open a new center, yes, it's a bit of a challenge to us. We find ways of cooperating with them. If it's a large engineering center, there are special niche skills that we provide to them, and we also help them manage the peaks and troughs of their workload. If it's a very small center, then there's not too much that we can do with them, but except provide opportunities which are complementary to the capability that they have in their companies.
All right. So, in that sense, would it be a sort of a cannibal effect on your revenues? Because since this work could actually be done in-house, they wouldn't need to actually outsource it to a company like us, isn't it?
True.
All right, sir. Thank you so much.
Thank you. The next question is from the line of Moez Tambawala from Florentry Advisors. Please go ahead.
Hi, good evening, sir. One question on your services business. As you grow going forward, do you think that additional resources will be required, or do you see any sort of non-linearity in the growth of your services business?
The pure services will need more resources, and it will largely be linear, so productivity tools help us change the linearity a bit. The IP business is the one where we can create an impact, a higher impact with lower manpower. So it's a mix of the two.
Okay, so by and large, on your engineering or your design services, that can remain non-linear as of now?
Will remain linear as of now.
Sorry, linear, sorry, yes. Yeah, got it. Thank you so much.
Thanks very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vaidyanathan for closing comments. Thank you, and over to you, sir.
Thank you all for joining the conference.